As the candlestick charts reveal, once the indexes, as is illustrated in the NASDAQ chart, broke through this little resistance level with kind of a slow curve, and notice how it did it with a very obvious candlestick pattern, the doji sandwich. It told us we were going to be in an uptrend. How long does the uptrend last? Well, the warning signals came from the fact that we were now back up in the overbought condition, and up here, we were a good distance away from the T-line. That, at that point, didn't tell us that there was going to be a reversal, but it gave us the probabilities to start watching for that reversal. So that same scenario can be applied to individual stocks. As you can see what's happened in Apple, another slow curve that broke out. But notice when it was trading up here today, where do most people buy? They start buying exuberantly at the top. We can see that exuberance based upon the magnitude of each candlestick formation and the fact that it's moved a good distance away from the T-line while you're up in the overbought area. When it's trading up here, there isn't any signs yet that there's any change of investor sentiment, but the candlestick investor has a very simple technique for watching when that probability of profit taking could be starting because of the factors that we were that far away from the T-line. Because the signals and patterns work just as effectively on any time frame, you can see on the 10-minute chart, Apple was moving up nicely, and then notice also on the 10-minute chart what was happening. It was starting to move a good distance away from the T-line. So why did the 10-minute chart become more effective? Because the daily chart was showing us we were way up above the T-line. We should start watching for profit taking. The candlestick investor has two elements to look at. One, they know that if it does a bearish signal up here, it's more than likely going to come back to the 10-minute T-line. Or two, if it does do a bearish reversal signal and close below the T-line on the 10-minute chart, that the way oversold condition of the daily chart is now showing us the selling is starting to occur. We can be taking profits up in this area. That's the 10-minute chart. If we start seeing selling, and we don't know whether they're going to come back down to this level, flipping over to the 5-minute chart shows a faster reaction. The hanging man, a spinning top, a shooting star, a bearish signal closing below the T-line. This is starting to show selling on the 5-minute chart, which also is confirming the weakness on the 10-minute chart. We can be taking profits up here well before there's a daily chart sell signal. That same scenario could be applied to the Amazon chart, which was having some very strong moves, up 50 or 60 points yesterday, and then up another 20 points today. The only factor that would tell us that there is the possibility of some profit taking is when it's trading up here. Note the distance away from the T-line. Once again, we could start seeing a topping action up here. Notice that they never could close it below the T-line at this point. It was up here when they started closing it below the T-line. About the same level it topped out earlier. That told us that maybe this is the top. Was this a good time to take profits? Yes, the daily chart was telling us we were way above the T-line. Take profits up here, which on the daily chart told us or indicated we were probably taking profits up at this level versus waiting to see if it was going to confirm a sell signal tomorrow, and you may have given up 40, 50 points to see that actual reaction. Because the candlestick signals and patterns have a high probability result, going short on lean hogs over the last couple of days was a highly profitable trade in the sense that there's our dark cloud. when it failed right here at the 50, continuing the downtrend, did a doji sandwich, meaning did a doji after that big down day, and then opened lower today, doing a doji sandwich, meaning that this candle right here was going to be the same magnitude as this candle right here. And because we are seeing we're in a downtrend and stochastics were heading lower, it just puts us in a situation where, once again, the probabilities of being in the right place at the right time is dramatically in the candlestick investor's favor. That'll be it. We'll see you in the chat rooms.